Pharmaceutical major Lupin has delivered a strong set of numbers this quarter with profits up over 50%, margins have improved, and there is a clear bounce back in the US market. To understand where the company is headed and how it is gearing up for a long haul in the pharma industry, I have with me on the show Mr. Ramesh Swaminathan, Executive Director, Global CFO at Lupin. Welcome to the show, Ramesh. Thank you for taking time out for us. Many congratulations on those strong numbers this quarter. And let's begin up with the quarter's performance this time. So Lupin has reported a strong quarter with good growth in both Indian and US markets. So what is driving this momentum, and what were the key operational efficiencies and the shifts that made this difference, and what were the key drivers behind this performance, if you can tell us?
The outcomes are really a result of a lot of hard work that they put over the last several years. So we, the first, of course, is really the top line buoyancy, and that obviously is a function of the kind of products that we bring to the markets. And clearly, we have worked assiduously on improving this in the US. And so we had a slew of launches over the last several quarters. Even in this current quarter, we have had Lupin, a pretty difficult product, and we have got exclusivity for a few more months to go. Equally, if we go down the path of the last 3-4 quarters, several quarters, now we've had, starting with albuterol, Spiriva, you had Mirabegron, a few of those products on the ophthalmic front and the like. A lot of those actually having a lesser competition. The intensity of the complexity of issues around them are, would not be easy for the competition to set in. So given that, plus, of course, the fact that there has been a lot of work in terms of cost improvement, that focus has been incessant across every line of the P&L, so to speak. Our gross margins have gone up, over the last several quarters, so to speak. Equally, the cost or efficiencies that we brought in and the like optimization measures that we took in terms of routes to synthesis, or be it alternate vendor development for various raw materials and the like, the productivity on the sales force, on the R&D, on the manufacturing and the like. All of this have paid rich dividends, and our EBITDA margins have kept up continuously over the last, I would say, 13 to 14 quarters, from a nadir of about 10.5 that we saw a few years ago. Clearly, there's been tremendous progress, but we're not resting in our laurels and are still working on it. And we believe that there is more to go in terms of margin improvement.
Okay, let us talk about the US market. So the US business seems to be, back on track. So how confident are you about sustaining this business, especially given the usual, pricing pressures and regulatory uncertainties with US, Trump tariff wars as well?
So we actually were attempting, in some ways, a paradigm shift, moving away from, in fact, the plain vanilla commoditized products of the past, the OSD, so to speak, into more complex stuff. And the result of which was really the forays with, in fact, a number of respiratory products in recent times, and of course, some of the more complex ones when it comes to the OSD, Mirabegron, or for that matter, Lupin, are real instances of that. And given the fact that we are looking at, in fact, a lot of complex injectables appreciable for awaiting approvals, which is like, I would say, Risperdal Consta and the like as well. So clearly the focus is on actually being differentiated in terms of our portfolio across various markets. And these are obviously global platforms, so we use the respiratory portfolio for, in fact, growth across several other markets. So that's the reason why you find secular growth across several countries in Europe as well, and clearly, in other parts of the globe. But having said all of that, our focus in India remains, tremendous. With, in fact, looking at feet on the ground, looking at differentiated products that we bring to the table from a license perspective and from our own stable, not to speak of potential M&A acquisitions. So all of this would actually give us the confidence and the optimism that the future is going to be pretty robust for us.
Okay, you talked about those, high value launches in the US. If you can walk us through what kind of products are these, and how are these products helping Lupin stand out in a competitive market?
Clearly, those results are there to see. So we spoke about albuterol, Spiriva, in the past. So we had Zopinex that we bought into as a brand, long-listed product, but no competition really. And of course, looking at products that we have brought out in recent times, which is essentially Mira background last year, Tolvaptan. But I also spoke in fact, of the imminent launches, which is liraglutide, glucagon, all of those. So clearly, very good reasons for us to be optimistic for America.
You also discussed about the Indian market. It's a key growth engine for the company. So, what kind of therapies or segments are you focusing at, and how do you plan to grow and outpace the market growth?
Clearly, our focus has been on being amongst the top three in terms of cardiovascular, diabetes, and respiratory, and done pretty well. Even in this quarter, our growth rates in each of these therapy areas has been between 17 to 19%, so to speak. Overall, it might look as though our overall performance has been a little lackluster, and that's more because the fact that there has been exclusivity, loss of exclusivities on a couple of products in recent times. That if you were to knock that impact out, then we clearly are doing very well, at least 1.4x of the market. The intention was to grow at least 25 to 30% above the market, and we continue to do that. And I spoke about, in fact, our strategy of a four-pronged strategy of feet on the ground, differentiated products from our own stable or in licensed M&A. All of that goes into making up what we think should be robust growth in the Indian market.
Looking beyond India and the US market, what about European and emerging markets? You have also been expanding in here. How critical are these geographies for you? And are you also planning to expand into further any more markets?
Clearly, we've had a global thrust, and the growth in some of the advanced markets of Europe have been secular. We have been looking at various acquisitions in recent times to actually look at being in the big five, so to speak, which is essentially Germany, UK, France, Italy, and Spain. We have been expanding, and a lot of the products that we're creating are really global products that potentially get launched in several parts of the globe, including for sure America and parts of the European big five and other parts as well. Clearly, that's the focus. With the thrust on biosimilars and in fact the regulatory framework easing for that, I think we are well set for good growth across various therapies and of course across markets.
You have also increased the spending of in R&D around 8% of the sales. So we want to know that where is that investment going? If you can explain for us.
Clearly, the idea is to actually have a fully, differentiated portfolio for us, and the thrust is obviously coming out on complex products. We have been working on this assiduously, and the results are there to see. And in both absolute terms as well as a percentage of sales, the R&D expenditure has been going up. And that I think is the way it would be for the next few quarters or several quarters, so to speak, because clearly we want to have a pretty strong pipeline for the future.
So what is the outlook for the company? Is there any more appetite for acquisitions, and where are you looking at? Basically, what areas, where do you want to make acquisitions? Or if you can explain for our viewers, what is the outlook for the company for the next 3 to 5 years?
I'm glad that you asked this question. You would appreciate that we are actually a debt-free company, and it's not as though we believe in actually leveraging our balance sheet for the right purpose. And clearly, acquisitions is the focus. We would be looking at assets in India, bite size, $250 to $300 million each asset, so to speak. But equally, we are very keen on actually getting into specialty in various parts of the globe. We in recent times have also added to look at beachheads in Europe, so that we are present there and we could leverage our portfolio across all of these markets. Because at the end of the day, generics is all about success in generics is all about leveraging a portfolio across various markets, and exactly what to do.
So what are the key products that we should be watching over the next year? Any game changers in the GLP space or otherwise? I mean, and how critical do you think the Indian market is for you in these particular segments?
So two questions in the same breath. We spoke about differentiated products coming in from respiratory products, the biosimilars portfolio, and of course the complex injectables. Insofar as respiratory, for example, is concerned, there's no product which we are not working on, to launch over time. Clearly, that's a focus area. Equally, we believe, that money should be spent on creating the right grounds for specialty. So we're working on a number of products out there as well, and of course looking at acquisitions, to get us the credibility in the market, and clearly establish ourselves as a credible player with an existing portfolio of assets in the specialty space. Plus looking at potentially, if you were to expand there, getting the right skill sets, which also calls for a portfolio to be there.
So what about the API business? We have seen a decline, and is it now a less priority, or maybe is there a reset underway?
Clearly, API is certainly of importance to us. We have done something which is remarkable in that we have actually carved out a couple of factories for potentially looking at the CDMO business, which we believe, given the thrust on China plus one as a strategy, and plus our own inherent strengths in a number of areas, and we're well set to kind of capture that space. In the recent times, so essentially, our focus, of course, has been on products for in-house consumption. But when you speak about the stated numbers in terms of sales to external, it's because a chunk of, in fact, a cephalosporins portfolio, which is has not done too well because of lack of demand. You would appreciate it's really a cyclical business, and exacerbated by the fact that PNG prices have been falling dramatically from a high of 22 about a couple of years ago to 18, and now to less than $10. So clearly, we've been impacted by that, but it's temporary and it's cyclical in terms of the business nature, and we hope to bounce back on that.
Thank you so much, Ramesh, for those insights, and thank you for taking time out for us today.
Thank you very much. It's always been a pleasure.
That was Ramesh Swaminathan talking about outlook of the company going forward. Meanwhile, as we follow this company for more developments, you watch out for this space for more updates. Thank you.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.